Hi everyone, welcome to my Monday market commentary. I'm Isaiah Real. Today is April 13th, 2020. Let's begin. Last week we had a historic week in the stock market. Best week since 1974. All major indexes were up. Dow Jones was up over 12.5%. S&P was up over 12%. The NASDAQ was up over 10.5%. So as investors, it was nice to see green in the stock market last week. Some bullet points of highlights of what's happened last week during the COVID-19 pandemic. Unemployment rates continue to rise. End of April 4th, or the week ending April 4th, we saw another 6.6 million people file for unemployment. That brings the total to people that have filed for claims of unemployment to 17 million people. Pay attention to that, because my own opinion is that we're going to continue to see that number rise. In reflection of that, a question I ask is, what is the Fed doing to help those people? And what is the government and Fed doing to help the businesses? Well, we know that the government has the CARES Act, which is providing stimulus checks to the unemployed, to people that are being affected. But what are they doing for businesses? Well, there's a plethora of different programs that are being offered, but there seems to be two major ones. The first is the PPP program, the Payroll Protection Program, and it provides companies a loan to pay for payroll costs and expenses. The other one is the EIDL loan, the Economic Injury Disaster Loan, which is a grant of up to $10,000. But with those two, there's been some issues. When applying for the PPP loan, banks have been so overwhelmed they have not been able to process these applications. With the EIDL loan, Congress budgeted about $17 billion for this program. Over $383 billion have been applied for. That is a huge discrepancy. So us as investors, us as Americans, we should pay attention to see what the government does with that moving forward, because that's going to have an impact on the economy, because we need those businesses to continue to keep the economy going. With that being said, I do have some thoughts of my own. The first is that I do think we're going to have to continue for the foreseeable future, for the next weeks and for the next few months, up until about summer. We're going to have to walk through the mud, meaning the mud is going to be some breaking news, some historic figures that we may see in the upcoming weeks in regards to the COVID-19 pandemic. Historical unemployment numbers. We may see these numbers rise to levels that we have not seen before. Businesses going out of business. We may see mom and pop shops, restaurants go out of business that we've shopped at and dined at. We may see some major companies that we've dined or shopped at go out of business or get bought out, depending on how their financials are. GDP, which is gross domestic product, is the way in which we measure how our economy is growing. We're expecting that to be a historic low in GDP for the second quarter. So that's the mud. But we're anticipating it. We know most likely that is already going to happen. So when that does happen, it's not going to be a surprise. But as investors, as retirees, as pre-retirees, we need to be aware of that. And we need to be prepared for that moving forward, so that when we do see this kind of information come about, it's not going to be a surprise. However, with that being said, there are also some positives. Numbers of hospitalizations decreased in New York yesterday. That's fantastic news. And it looks like a lot of the worst case scenarios models that we saw for the coronavirus have not come to fruition, which is fantastic. Continue to do your part. On top of that, when I look at my metrics for what's happening with the stock market right now in the economy, all major indicators have turned positive. They turned into a bull alert. So historically speaking, that is a positive mark for equities and for the markets. Granted, I don't think we're out of the woods yet. I do think we're going to have some ups and downs in the stock market. We're going to have some great days to come, and we're probably going to have some not so great days to come. But the matter of the fact is, some of these indicators are turning positive. We're starting to see more positive news out there with the economy, with the markets now, and we'll continue to do so. So as Americans, as investors, we've been through this before. This is not the first time we've gone through something like this, and it definitely won't be the last. But we do know that together we will push through this, no doubt. And as investors, we will be prepared, and we have a plan in place to help us now and in the future for our monies, for our legacy, for our money. So that's my Monday market commentary. I hope you've enjoyed it. I'll look forward to talking to you soon. Thank you so much. Take care. Stay safe.